So hello everyone. Myself Sachidanand. You can call me Sachin, and I'm in the process of I can say the learning on a journey of sharing my knowledge about the stock market, investing and trading. So basically, I was talking to Mr. Prasad sir a few minutes before because he was the first person who joined, and about his experience on the trading. So he mentioned that he never been interested being an even IT professional. I found that many of the IT professionals are default into the trading field. So when I started around 4 year learning this trading, 4 year, 3, 4 year back, before that I was also in a similar situation. Like, okay, I used to assume that the trading is a trading or stock market is a complete gambling. But when I learned by myself, that changed the my my view towards the trading or stock market. So stock market is also like one of the profession, right? It's not like any gambling or so, which I used to think. And then when I started learning, and then I learned that okay, it is equivalent to any other profession, right? Many of us takes as a building a long term goal. Maybe sometimes take a full term opportunity, sometimes they do it as a part of or for their side earning, and or the maybe parallel source of income. So considering all these facts, many people ask like, who are the ideal person to go into the stock market? And here is my answer. I mean, if somebody is maybe a working professional and wanted to have some side incomes like doctors, engineers, lawyers, or any professional, because in their existing professional career, there are maybe some people have the growth opportunity, some people may not be having, and some people wants to do something in addition to their normal job. They can also do other things that normally we do investment in the traditional way, like property or the flat or the land, maybe some people in the gold. What I learned is the stock market is one of the uh, good learning, I mean, good investment area where there is no limit. Maybe you can earn up to maybe from 10% to 1,000%, depending on the sector or area or the time period that you choose. So in short, I mean, no matter who we are, either we are a working professional, experienced professional, senior executives, or even non-working somebody, maybe housewife, and they wanted to do something by after their free time, they can learn and get into the investment, stock market, trading, and learn. Okay, so yeah, it is because we all earn and do saving. So I can say in this way that okay, maybe after initially we work for the money, and once we have certain money, it is a one way to put our hard-earned money to work for us. So that is the way I look into the stock market. Okay, so to start with, I based on my learning, I made it simple, very simple, right? So in a stock market, my learning says that there is only one rule, which is very simple. So anything, whatever you are buying, buy it at a low price and sell it at a high price. Okay, this is as simple as that. However, knowing that when is the what is considered as the low price for any stock and what is considered the high price, that is the all about the learning. Like when what are the market indicators, or what are the factors, or the how we know that okay, when to consider the low price or when to consider the high price. Okay, that is all about we are going to learn in this journey. Parallel to that, what is the success philosophy? So um, especially in the stock market, I mean, typically what I am going to cover is the technical part. Technical, this is called technical analysis. Like by looking into the chart pattern and certain indicators, we are going to predict or maybe arrive at a kind of a large conclusion that okay, this is the maybe a high price or the low price. Along with that, technical analysis is the one part. There are the remaining three part which most of us or even the experienced trader or investor may struggle. That is the mind management, money management. At the same time, have the long term view. Because many of us get into the stock market with the view of short term goal, maybe a quick money, but it is not like that. This is like a running a marathon, not a 100 meter sprint. Okay, and in the stock market, the money is equivalent to life. Okay, or maybe a cricket, where whoever the cricket fans, they can consider as a stock market is kind of a test match, or the more than the test match, where being in a pitch on more important than hitting the six. So if we are on the pitch for a long period of time and keep on facing the balls, there will be high possibility that you will able to make the large score. Okay. uh, okay, so few very basic things that we are going to cover today about the stock market. So in simple word, what is stock market? Okay, so stock market is like I can say is like a place, for example, Amazon or Flipkart or Walmart, or, basically, okay, where um, uh, maybe companies list their shares, okay, for the trading. Uh, what are the trading I'm going to cover in the subsequent slide. And trade, that the term trading is a simple one. I mean, something somebody is buying and somebody is selling, is nothing but the trading. It is the simple term. Okay. So I mean, how trading happens, how the stocks are being uh, uh, sold or purchased in any platform. So basically, there is we are purchasing any item, for example, mobile phone via Amazon app. Okay, that is the platform. Similarly, all these stocks are getting listed via stock exchange. I mean, in India, we have multiple stock exchange like National Stock Exchange or Bombay Stock Exchange, or few more are there. For example, MCX, where precious metals, crude oil, and the other metals are being exchanged. So these are the different stock exchange where stocks are getting purchased and sold. Okay, so these are the kind of governed by the government, so the central government. However, again, for the selling and purchasing, we need to have a certain type of accounts. For example, like we are having a banking account through which we are paying to the maybe Amazon or Flipkart, or we are having the UPIs through which we are making the payments purchase. So similarly, to purchase any stocks, we need to have a special account which is called a trading account or demat account, and that we need to have to sell and purchase the stock. Okay, so please feel free to interrupt me in case of you have any question or any confusion. My purpose is to help you with as basic as possible. Okay, start with the alphabets. Okay, as a kind of I mean, some of you might be already having the experience in the stock market, but I understand from many of the friends that okay, they are very beginning, very beginners. They are just starting to learn. So I will be covering each and every basics so that I can able to help the maximum audience. Okay, so as I was mentioning about these are the two types of trading account and the demat account. So in the I can say earlier days there used to be two different types of account, but nowadays those accounts are merged together and we have a multiple options where like SBI or ICICI Direct or Zerodha, Upstocks. There are many service provider who are keeping these two options together. But from the difference perspective, trading account is where we actually buy and sell the stock, and the demat account is okay. Once we buy the stock, this is a separate account where we keep them. It's like maybe a fixed deposit and saving or no current account, something like that. Okay. However, nowadays you don't need to hold the multiple accounts. I mean, these service provider having the same single account, which can be used for trading as well as the demat accounts. Okay, so based on your I mean, there is nothing hard and fast like a banking account based on our availability or our comfort or liking. We are choosing to open a bank account with any bank. Similarly, with a trading account as well. Personally, I am using Zerodha for the two purposes. One is it has the minimal brokerage. Brokerage means we need to pay a minimal amount whenever we are buying and selling the stocks. Okay, to these service providers. So that is one reason. Second reason is it is very easy to use. So because of these two reasons, I am using Zerodha. And here again, I'm not anyway promoting this Zerodha. So just to be clear. Otherwise, I mean, based on your interest, you can choose. Third benefit is with Zerodha is, if you, because I'm using Zerodha, so if anybody has any additional question or clarification on the trading account, I may able to help you. And for other, because I'm not using, so I may not able to help you. But nothing to worry. I mean, there are for any service, any account, once you open the account, mostly they provide the overview session of these accounts. And I mean, over the time you can get used to it. Okay. All good. So a few terms that we use in the area of stock market. One is, the first one normally we call about the term equity. So equity in the stock market is refer as the number of shares that owned by a company. Okay. So for example, there is a company ABC, and maybe they convert their value of the company maybe into some number. For example, they say that, okay, this I am the, maybe in the simplest example, that okay, maybe 100 crore company, or maybe in a simple term, there's a 1,000 rupee company. Okay, to understand very easily. So but to expend themselves, they may need to collect additional amount. So there are two regions, or sorry, two ways to do that. Either they get the loan from the bank, or other ways to buy, I mean, take the some money from their friends and family. So in a small business, maybe it is possible, but when the business grows, so if anybody is borrowing the money from the bank, definitely the huge interest that they need to pay. And second one is, I mean, it is not practically possible to get that much money from friends and family. So that was is kind of a invention, or the new initiative happens where these big company directly, I mean, started going to the a common public and saying that, okay, you give me maybe some money and become the owner of certain percentage of the company. For example, if the company value is maybe 100 rupees, and if 10 rupees is invested by the investor, maybe any investor, the investor is the owner of 10% of that company. So whatever will be the profit, maybe by end of the year or end of the month, depending on the contract or the engagement type. So the company need to share the similar percentage with the investor. So 10%, if the company makes the profit of 100 rupees and you are the owner of 10%, then 10 rupees you will be entitled to get it. Okay. So I mean, this is a very simple explanation. So in India, I mean, okay, so if it is happening maybe a small scale, okay, there may be possibility that, okay, after getting the benefit, the owner may or may not share it. So to own the complete governance, these stock exchange, which is governed by the Indian government, they are taking that ownership. So any company wants to go to public to collect or to offer their shares, they need to list them into any one of the exchange, for example NSE or BSE, and from there the common public can purchase the shares. Okay. And whenever the price of those shares moves up, maybe depending on the time frame that we are going to learn, they can able to sell their shares and get those profits. So maybe it's 100 rupees to today, and maybe after 6 months, 1 year, whatever is your waiting capability, you can wait, and maybe 100 become 110 or 150 or maybe 300, don't know, and then you can plan to exit. So that the technical analysis is all about that, okay, how to know that, okay, I mean, when to exit and when to enter. So that's the equity part. Okay, ask and offer. So these are the again two terms that, okay, whenever whatever the maybe price which is asked, okay, that by a seller, maybe you a company is a seller, or some individual is a seller of the stock, and they provide, okay, I need this much money to sell my stock. So that is the ask price. And the bid price, okay, somebody, a buyer who wants to buy that product or that share in at a certain price. That is the bid, basically. So in a simple term, that when we go to the a vegetable shop, okay, then they ask, maybe say that, okay, maybe tomato is a 50 rupees kg. Okay, that is their ask. And sometime we do a bid, okay, can you give me 40 rupees? Okay, so this is a very simple term. And when they both agree, the trade happens. So suppose either you agree on the ask price, or they agree at your price, or you agree at the intermediate price. Maybe neither 40 nor 50, let's agree on the 45 rupees. The trade happens, right? You get the tomato, you pay 45 rupees. So similar thing is also happening in the trading trading world. And based on that only, I mean, if you look at the any international market, the gold price or any silver price, that is also decided by the common people like you and me in the international market. So every day people keep on bidding and giving the ask price and the bid price, and whatever the latest bid happens, latest trade happen, based on that, next day international silver and gold rates are announced. So every day we ask, okay, what is the rate of the gold? Maybe we want to purchase the gold, we check, okay, what is the rate? So whenever rate goes down, we prefer maybe purchase that day. I mean, for the investment purpose. The and the third is spread. So many a times that, okay, what happens that there is a ask price and the bid price. The difference between the ask price and the bid price is called spread in a single term. So in the example of tomato, the 50 rupees is the ask price, and the bid price is 40 rupees. So in that example, the 10 rupees is spread. Okay. So I mean, these are the terms which will be typically used in the stock market. And maybe we don't need to remember all these terms. Okay, I mean, as and when we will learn more, we will keep on using this term, and we will be very familiar with that. So just for the knowledge purpose, let us have maybe just keep in mind. But in practical scenario, no one need to buy hard these terms. And the term we use as a broker. So in the maybe time of 90s or 90s, 80, when there was internet was not very famous, and the online, or I can say those apps were not there. Okay, so there used to be a physical trading. Maybe somebody need to either make a phone call to a person, and who the person is registered with these stock exchange, and they used to buy or sell the shares on behalf of us, maybe behalf of the investor. So those guys used to term as a broker. But nowadays, after evolution of the internet and the mobile apps, brokers are almost nowhere in the market. So the same, your online trading accounts are treated as a broker. Okay, so I mean, these are the in we can say interface between investor and the companies, or with the stock exchange. A few other terms are used in the stock market is bull market and the bear market. It's a very simple. Bull market is referred as whenever the price is going high. Okay, so bull and bear. I mean, bull is considered a stronger force, and bear is the weaker force. So when the term is used, okay, the market is bullish. So bullish is derived from the bull. So that means that the price of any stock is high. Okay. For example, last year sometime the IT sector or the banking sector, it was treated as a bullish market because all the banking stocks or IT stocks went higher and higher, maybe their lifetime high. And the bear market is sometime when the overall market goes down. Okay, that is considered as the bear market. Bear market means overall declining. I mean, shares are going down and down. Okay, so bull market and bear market are two other terms. Other term used for the bull market. Uptrend is also used for the bullish market or bull market, and downtrend is the under term for bear market. Okay. Yeah, feel free if you have any question in between. I would be happy to answer. Few other term is called volatility. So volatility is nothing but the price fluctuation. Okay, so I mean every day in a day-to-day life, in a common scenario also, that price of the items, for example, maybe tomatoes or potatoes, and then these price not a fix. Okay, it varies between 200 to 20 rupees to 200. Okay, so those fluctuation in the market, in the share market also, price is not the fix. I mean, every day, not every day, every second, every minute, price keeps on changing. So the change in the price of any stock is referred as a volatility. Yield is a simple term, is referred as the whatever maybe return on the investment. So maybe this year or last year, maybe somebody invested in the banking sector or the IT sector, and sometime maybe after a couple of months, its price gets increased, and you sell those stocks. Whatever is your profit. Profit is nothing but your purchase price. Maybe you purchase at 100 rupees and you sold it at 150 rupees. So the difference of sell price minus purchase price is the yield. That is your profit. Okay. Few other terms also is in stock market, that is called the primary market and the secondary market. So primary market is term that use where the companies are first time going public. So maybe there is some startup who directly, either they invested by their own saving or by their friends and family, or directly borrowed some money from the bank, or some direct investors. Okay, and they started a company. After maybe a year or couple of years, they wanted to do the expansion, and then they when they need maybe a bigger amount of money from the market means the common people like you and me. So they go to any stock exchange, and there are certain criteria, so they list them. This is called listing. Okay, so when they list first time, and the first time they are offering their shares to the common public, that first time is called the primary market or the IPO, initial public offering. That means that before that date, they were not in the in the stock exchange. The first time they enter the stock exchange, and they sell a certain number of shares, maybe a few thousand, a few lakhs, and they provide them having some fixed price. So nowadays we get a news that, okay, this company is going public, or IPO is coming from so and so company. So that's the primary market. That means somebody is purchasing first time, or somebody is listing, providing the first time share to the market. Okay, for the common people. Secondary market is once they are listed, people has purchased their share, and again these are being traded into the day-to-day life. So after once their listing is done, every day some people are keep on selling and purchasing depending on their need. So whatever the shares typically available in a day-to-day purchase, that is called the secondary market, and mostly the trading and investing happen in the secondary market. Primary market is a once in a lifetime, happens either the first time, or sometime that maybe even company wants to do another expansion. So second round of funding or third round of funding, again they go to the market and, okay, collect the additional money. Okay, so sometime we heard the news about the Reliance or sometime Adani that, okay, here IPOs, second IPOs are coming, or third IPOs are coming. Okay, so this is the example of the primary and the secondary market. Yeah. So some time back we were discussing about why the stock market price fluctuates. Okay, so there are primarily three reasons. First reason is high demand and a low supply, right? So our I think practical example is in the past we have seen with the onions. Sometime we see with the tomatoes, and maybe sometime I think long back we have heard about some news about the salts, right? So because of some other reason, I mean, wherever there is a very high demand in the market and supply is low, um, it is a general tendency that okay, people, the price gets increased, because of this demand and supply, right? And similarly, when there is a very high supply and low demand, okay, sometime in the market we say that okay, there are a lot of tomatoes, so tomato sells in the 5 rupee, 10 rupees also. Okay, so the same terminology is also applicable in the stock market. So sometime that there are the very big investor, HNI, or maybe INI. HNI is a high net worth individuals or the international players. When they puts their money into the Indian market or any market, so that means that demand is goes high demand. They are purchasing very huge amount of shares, and the price are bound to go high. At the same time, when the big investor are exiting from the market, then that means they are selling large amount of shares, and in that case, there used to be high supply, maybe a low demand because purchases are not that much as compared to the sellers, and then price declines. Okay, and many a times there is not much of the fluctuation. My price is almost constant. So that means in general that okay, demand and supplies are almost constant, and hence it is. I mean, there is not much fluctuation. That type of market we say the sidewise market, or the sluggish trend. So so high whenever high demand and stock price appreciate, we call is the again the same bullish market or the uptrend market. Stock price decline in the bearish market or downtrend market, and demand supply is almost constant. There is not much of change happening in the price. This is a sideways trend. Not much price fluctuation is happening. Okay, so apart from these three main factors, there are some additional factors uh, which also impacts the price of any stock. The top one impact comes from the company performance, from the other factors. Okay, so every quarter big company announces their quarterly result. Okay, so any big IT company or banking company, they announce that okay, maybe their whenever their earnings are maybe much more bigger or as compared to their forecasted or targeted uh, value. So when their earnings are very good, as compared to what is expected, and when the news comes into the markets, okay, that company shares bound to be go up, because there is a very positive vibe into the common people that okay, this company is doing very good, and let's buy the share, and more people uh, you know try to buy the share, and when again this is again demand and supply, and the price goes up. Sometimes a sector performance is sectors means uh, like IT sector or the pharma sector or banking sector. So combination of a similar kind of companies is called as a sector. So maybe Infosys, TCS, Tech Mahindra, Wipro. Okay, all these are the IT companies. So when some of their companies are doing very good, so typically treated okay, the IT sector is maybe doing very good, and there is a some mindset happens that okay, IT sector is very good, so everybody try to invest in the IT sector, and that is how the demand of shares goes high and price also goes high. So, and the last one is the news event. News event is again multiple type of news event. It could be a company's performance. Sometime a company is going to acquire some other company, or maybe there could be some negative news also. For example, recently that happens with Adani, right? Lot of negative news came into the market. There was a nothing. I mean, you know, company wise, no issue. It was going well, but because of certain news, the stock price went very, very down because it impacted the common people emotions very negatively, and maybe the fear happens, the panic happens, and that is the reason that time people try to exit their from their investment as soon as possible. So that means high supply and very low demand, and that impacts the price, and price goes down. So these are the three other factors which impacts the price fluctuation. Okay. Yeah. Few other terms again from the basics. So we are covering a lot of things today, the basic again, and we keep on touching these points once again. But before, so whatever we are trying to do is kind of a I can say before planting any new seed, we are trying to make the soil fertilizer. I mean we are trying to fertilize the soil, with the right kind of manure or the whatever needed. So this is what we are doing. We are trying to understand the basic, and once basic will be strong, we can able to build uh, high level of learning on top of that. So there are three type of markets are there primarily. Okay. So one is called the equity. Equity means the direct share of the companies. It is also called as a cash market. Cash market means, for example, as on date, let us say the price of TCS, for example, TCS share is maybe 2005 rupees. So we purchase one share in 2,500 rupees and keep it. So that's called the cash price. At the same time, that is not the only way. There are other derivative also within this equity that is called futures and options. That is detailed discussion we will have. But as of now, we can then understand this way that based on the future prediction of that particular stock, there is certain kind of trade happens that is called as the futures, and options are basically treated as a insurance kind of purpose, and on that insurance of those derivatives, there is a another type of trading or in trading happen that is called as options. So this will be, we will be discussing future, but as of now we need to know that okay, there is a cash market, and on top of cash market there are derivatives. Maybe to describe in a simple term, for example, milk. Okay, milk is the kind of, you can say, equivalent to the primary stock or equity, right? But from the milk, we produce other products also, maybe a curd or buttermilk or sometimes ghee or butter, right? But the base product is the milk. Via using milk, we are producing the other products, and we are doing the business. So similarly, in the stock market also, there will be the base product, that is the equity, and using the base, there are some other products for the trading purpose. Our stock exchange generates or produces, that are called as a derivatives. Um, okay. And within equity market, there are different types of stocks, which is again derived in the three categories: large cap, mid cap, and small cap. These are the nothing but depending, based on the company's market share, or I can say the how big companies. So large cap means a big companies like TCS, Tech Mahindra, Infosys, Tata, Reliance, Adani. These are companies of the big cap. They have a large market reach. Okay, multi-million company. Mid cap as the maybe I kind of a not that much big or not small. Maybe companies like maybe Parle-G or Britannia, or these kind of company who are having a good market reach. However, they are not as big as the large cap. Small cap again as the another third category, which are having a comparatively lesser market reach. Maybe some of the, we can say, um, local manufacturing companies are there. Some companies are there into the producing some very niche kind of product, or we are supplier of the big companies, right? So these are the small cap company. So depending on individual choice, when we learn more about the stock market, we can also learn that, okay, who we are and where we need to which company we need to invest. So it is like our individual, like sometime we go for a shopping in a mall, sometime maybe a local kind of a Reliance Fresh or something. Sometimes we also go to the local market. Okay, depending on our need, what we need basically. So similarly in the share market also, based on whatever is our need, are we can sell or purchase the stocks from large, mid, or small caps. The next category is called commodities. Commodities are the basically related to the having the few types. Okay, commodities types includes the bullion, base metal, energy, and agri. So bullion basically talks about the precious metal like a silver, gold, platinum, etc. Under commodities, base metal are the maybe aluminum, copper, lead, etc. And then the energy sector is crude oil. That is the trading happen. And agri commodities also there, like jute, cotton, and few more agricultural products. But primarily, commodities, precious metal like a gold and silver, there most of the trading happens, and somewhat the crude oil. Remaining sector like a base metal, aluminum, copper, or the agri products like cotton or wheat or jute, there are not much of trading happens. Very few people do the trading. And the other sector is the currency market. Currency means where the international currency conversion happens. Maybe US dollar to Indian rupees, or Australian dollar, or the pound. There are four or five types are there. In as per the Indian market. So there is also, but in this currency market, USD or INR is the uh, big field where people trades. The thousands and lakhs. Okay, and that is the another sector, another area. One area where one can do the trading with lesser capital, also maybe as less as 10,000. Okay, we'll be discussing more on that part. So here is the one question for maybe everyone, like why we are here. Okay, there are a couple of options. Maybe to make some money, some maybe to make money somehow, or knowledge on something to earn, easy way to make big money, don't know, maybe what to do, what need to do earn money, and maybe ways to have a secondary source of income via trading or investing, or maybe a wealth creation through a long-term investment. So typically, we fall under some of these categories, okay, depending on our interest or knowledge. But I see it here as that, okay, the trading or the investment is the systematic way. Let me have some water. So as per my experience and suggestion, trading should be treated should not be treated as something easy way or a quick way to earn money. It is a kind of a systematic, or it is a process to learn something, do the investment, have some knowledge on the technical analysis, maybe sometime fundamental analysis also. And then when we learn the process, apply the process, and then start slowly, rather than treating it as a quick as a mean to earn some quick money. Right. So maybe I'm not sure if any one of you here are there, like just to know something in a couple of days to earn quick money, then maybe you are not not at the right place, right? So I will take a simple example. As per our our society, Indian society, or here we typically minimum study for up to 18 year or 22 year, or maybe somebody doing a doctorate maybe 25 28 year, and then we start earning money, right? So minimum, and on 20 on an average 18 year or so we spend and gaining the knowledge, and then start doing some job or business, and then we earn money. Okay, So when we are trying to learn something about the stock market, I mean, you need to have some patience and some long-term goal and vision to first is spend time on the learning. Uh, and I mean, I would say at least couple of months, 2 to 3 months it will take. If somebody is having a really fast learner or having some good idea, you can also start uh, doing or trading early. But I would say that okay, 2 to 3 months of time it will take. Okay, depending on your learning capabilities, and then you will be comfortable. Right. So that's the one thing I wanted to clarify this point of time. Yeah, here there are some some good thing. I mean, some generic term I'm going to talk about. So these are the some of the books. I mean, which help us to build our mindset, right, about the investment, right, which I found it very helpful. Think the intelligent investor is one of them, and other one is not. I mean, not about typically about the stock market, but they will be helping us to build the right mindset. Okay, balanced mindset about the stock market and the investment. So whenever I mean having a free time or find out some time to read these books. Maybe many of you have already gone through this book and maybe can understand that why I'm talking about some of these books. Again, this here I'm talking. I mean, some of the successful people, not only the stock market but in the life. Okay, so for example, Richard Branson. I mean, these are the few quotes which I like it and I'd like to share. He said that if someone offers you an amazing opportunity and you are not sure you can do it, and then at least say yes, learn it, and then then learn how to do it later. So first of all, learn it. Maybe this is time of learning, and then whenever you are comfortable, you can try to apply those learning. Right. Uh, Warren Buffett, I mean, this is everyone knows that about it, one of the uh, greatest investor of the world in the present era. And okay, so he also recommends that okay, if you want to be a successful, make reading as a habit. Just sit in my office and read all day. I mean, that is his. I mean, some of his course which I like it. Okay, Rakesh Junjunwala, you know. So he is one of the greatest Indian investor. Is also called as Indian Warren Buffett of India. So his quote say that never put your hard-earned money without proper research. Never invest according to stock tips. And that is what I also shared that, okay, I'm not here to provide you any tips. I can able to help you in process of learning, whatever I have learned till now and whatever I will be going to learn. I mean, I'm also parallel learning. Okay, so I'm here to share the knowledge, not to share the tips. Right. Yes, these are some Indian investors who are very good at investment, and later on they turn into the business. Radhakrishnan Damani, that we know he's the owner of DMart, but initially he was a pure trader and investor. He made a good amount of money from the stock market and the founder of the DMart. Uh, okay, Ramesh Damani, Vijay Kedia is also the other kind of a great investor from Indian market stock market. Okay, and he's very humble background, and maybe after spending a good amount of uh, years research learning, he made a good money in the Indian stock market. Okay, so I think we have already talked about the about the bull market, bear market again to just to rephrase the same word. Bull bull in a stock market. Normally we say that this bull is the speculator who is expecting that price will go high, right? Sometime. And bear are the person or the investor who speculates that okay, price is going to go down. So as per their nature, or I can say the term that is used, the bull market, the bullish market or uptrend, and bearish market downtrend. Right. Supply demand part again, just we understood. how the price goes up and down depending on the demand and supply. Some of the primary secondary market, just to repeat, okay, this is another example of primary and secondary market, right? The primary market, when it is directly coming the first time in the market, and when they are transported and they become a storage and distributor, all those become a secondary market in a in a simple term. Here is the another myth, which even I used to believe till couple of year back, maybe I can say till five year back, that okay, stock market is a gamble. But the truth is that for those who enters the market without proper knowledge and the guidance, yes, for those stock market is a gamble, right? So it's like a adventure and fear. So difference between adventure and fear. So if somebody is ready or learn that okay, how to enjoy, it will be adventure. Somebody that just going without any proper idea or research, it will create a lot of fear. Okay, so yeah, so need to follow the right method process to become a successful trader or an investor. So here I'm using the two terms, a trader and investor. Can anybody guess what is difference between a trader and an investor? Or anybody wants to add, share their view?
Probably trader is a person who just buys and sells. Investor is a person who puts his money for long-term use and tries to make money from that or return on
Yeah,
investment.
yes, absolutely. Yes, both. I mean, buying and selling both are doing in a both the places. Trader is also buying and selling. Investor is also buying and selling, but investor typically have a long-term view. And trader, it depends depending on his appetite or the patience. Maybe trader could be maybe 1 minute to 1 hour to 1 day or couple of days, okay, or maybe couple of months. Couple of months it become a kind of a investor category, okay. But trader is normally the term called used very much in Indian market called day trader. Okay, they are doing every day they are buying and selling. It's like a daily hawker kind of things. I mean, there's nothing wrong in that. I mean, somebody wants to build their career, okay, or have their enough time or not. I mean, that is their primary job, and they can. But either, no matter you are a trader or investor, that the analysis, the way the technical analysis that we are going to learn, it will be applicable for everyone. Even somebody is coming in the stock market for a 10-year view or 20-year view, the concept are not going to change. Okay, the only the time frame will change. You are looking the chart into the hour of 5 minute, 15 minute, 1 hour, or you are looking maybe daily, weekly, or monthly. Okay, so again, just to repeat that the process versus the results, right? So whatever we can see, the left hand side is the results. Okay, so in the stock market, or even the real life, focus would be on the process. So if we wanted to grow a mango, then what we need to have, we need to have a proper soil, a good plant, okay, or seed, and have the timely watering, sunlight, fertilizers, and the plant will automatically grow. When the season will come, you'll get sweet fruits, right? So once we focus on the process, result are the byproduct. Okay. Another one is that in the process of learning, we need to do a first small experiment. Like the agriculture field also, a lot of scientists, when they produce a better quality of the seeds, they produce maybe a couple of seeds, and then when their seeds are working well, then they go the large scale. So same here also, whatever we are going to learn, we need to apply into the smaller sector or the smaller chunks or with small money. And when the methods, whatever you have learned, it is working for you, it is working suiting your style, and then depending on your appetite or the capacity, you can do the big investment or the large scale investment. So the small experiment before the large scale cultivation, that's the analogy I'd like to say here. And again, learning. So about the learning is a very gradual process. I mean, maybe you can, if you remember the first time we wrote alphabets, maybe the alphabet A, and now we are, writing. So in the first time writing, it takes some time. Okay. So similarly, I mean, real life example. For example, we born as a, small kids. Couple of months we don't crawl also. It takes at least 6 months to 8 months or years for someone to do the crawling. Then we start, walking somehow. Okay. And then kind of starting running, maybe cycling, trying to learn the two-wheeler driving, and then sometime a four-wheeler, maybe a sports bike, and maybe who knows, maybe we can do a pilot as well, chopper or helico, whatever. So what I'm just trying to say is the learning is a gradual process. So don't expect that, okay, in a day or in a week, in a month, you will become an expert. You can become, but certain extent. Maybe you can from walking, from crawling to, you can learn walking to running and cycling. But if you expect that from a crawling to directly driving a sports bike, maybe that is the unrealistic expectation. So do not put unrealistic expectation in the process of learning. So give appropriate enough time on the learning, and then things will happen over the time automatically. And again, I've been becoming a champion. So here the area in the stock market also, there are different areas depending on the company type, sector. So I mean, one person uh, typically I mean, it is difficult to have a champion of the multiple areas, but I can say that, okay, once you learn the basics or basics of technical analysis or advanced technical analysis, those analysis you can apply on any of the stock. However, the same principle of fundamental may not work in all the stock. Okay, it will work depending on whatever the experiment, where are the experiment you did. So is in the from the stock market, the selection of stocks is like a selection of the life partner, so it will take for you some time to understand that, okay, how the script or stocks behave. Similarly, it could have, now I assume, definitely it took some time for all of us to, when, I mean, if you are having a life partner, I assume it will take some time to understand the life partner, how the mood is, how, when it, what instance the person is going to behave. Similarly, this also happen in stocks. So once you spend some time with the individual particular stock, you understand the stock in a better way, and accordingly you take your call when to buy and when to sell. Maybe in the personal life, for the selection of the partner, as per this, it is not recommended to have more than one, but in the stock market, maybe you can have couple of the scripts which we can like, but there are lakhs, maybe not lakhs, but at least hundreds and thousands of stocks are there. So maybe depending on the time on a particular day or particular time period for a week or month, you should be following a certain stocks, trying to understand the behavior, and then taking your investment or trading decision accordingly. Okay. So now the parts we are going to cover a little bit into that. What is the technical analysis? Okay. So technical analysis is nothing but doing the analysis of the historical data of the any stocks, trying to understand the market psychology. Market psychology will reflect into the trend of those stocks, behavior of the economics, and some other quantitative analysis. So based on this couple of those 3-4 parameters is combined to the technical analysis, and based on those technical analysis, we are going to purchase or maybe do the buying or selling of that particular stock. Okay, so so when we learn about the technical market, so based on the technical markets, technical analysis, we are going to predict the future price movement, which can provide the trader with some information needed to make some profit. Okay. So again, the good part here is that as part of technical analysis of the stock market is we will not be earning only by buying first and selling also. I mean, there is a way in the stock market that you can sell the shares even if you don't have the shares. Okay, that is called as the short selling, and that also we'll be learning. So I mean, typically we buy share first and sell it later when the price increases. But that is the normal market, happens. But it's in the stock market, you can sell it first and buy it later also. Both the things are possible. Buy now, sell later, or sell now, buy later. So in what it means that, okay, when the market is falling down, okay, you can sell at a higher price and buy at a lower price. Okay, so those things we will also understand and learn. So as of now, I'm just wanted to just show you a quick, how that uh, stock of any company looks like. So so this is the, I mean, kind of a window of a site called investing.com. We are going to cover one day, I mean, one complete session on how to use this particular site. But here just an example that here I have opened the chart of Reliance Industries. And whatever we are seeing here is, green and red, okay, in the form. This is called as a candles. These are the representation of the price. Okay. And as of now, I have, here is the selection, like you can select these candles based on the time frame. So as of now, I have selected a daily time frame, right? This selection is the monthly. So just to have this is the overall, I can say, lifetime view of a Reliance Industries, which may be listed into the stock market somewhere in 1994 or so. And from there, it keep on increasing. The overall price kept on increasing. So for example, if somebody would have been invested into the Reliance company in maybe somewhere in 2010, where the share price was maybe 266 rupees, and the current price is shows around 2200 or something. So maybe I can say in the 12 years or 13 years, the overall appreciation of the investment is around what, maybe I can say 7 to 8 times. Right. So okay, so this is how, I mean, that any stocks on the chart looks like. And when it comes to any candle, we can say, so right now I'm okay, let me select that daily candle. So daily candle means on any particular day, this is how the price fluctuation happen. So in that particular day, maybe the price could have started from the top. Okay, maybe I'll just show you a quick example of the how the price change happens. So okay, here is the representation of the same chart, right? One candle. Okay, how the green candle forms. So suppose when the market, okay, so one more information is typically a stock market online, which starts opens at the 9:50 in the morning and closes at 3:50 afternoon, right? So any candle formation is the how it happens that suppose when the market opens up 9:15 and the price is 100 rupees. So in the day, the price keeps on going up, down. Okay, depending on the whatever the trades happening in the market. And so it start at 100 rupees. It went down 93 till 85, and then again going up to 100, 102, 110, and ultimately reached up to the highest of 121, and again maybe by 3:30 it closes at 115. Okay, so that is how the candle formation happens. So it is the price is start at 100 rupees, is reached down till 85, and again reached up to 121 and closed at 115. Okay, so this is how the one candle formation is happening. Okay, so each day, okay, each day one candle, or I can say each time frame a candle formation happens. So basically whatever the time frame that we will choose, maybe it can be the 1 hour candle or 15-minute candle, based on the price which is fluctuating up and down, the formation of candle is happening. So when we say the any candle, the body which is having the green in color, that is called the body of the candle. and up and down. If you say the black color, that is called a wick of the candle. I mean, it is the same term of the normal candle that we use in our house. But this is a typical example, like the formation of a candle depend on the price fluctuation. So when it's a green means what? That whatever has happened even during the day, ultimately the price went up. That is how the candle is green. Green means the price increased. Okay. And similarly, how the red candle formation happens. So suppose the same example, 100 rupees price started at 100 rupees and it went to maybe 111, then again came down to 92, 100, okay, whatever the fluctuation, and ultimately it went down up to the 80, and finally the closed can during the closing time at 3:30 p.m. it is closed at 87 rupees, right? So from the 100 it went up to 1,111, and then minimum went to 80 rupees and again closed at 87 rupees. So whatever the difference in the price, okay, the day difference, based on that the candle body is getting formatted, okay, and based on the the ups and down, okay, the high and low, the wick is getting formed, right? So from the base price, like from the starting price 100 rupees and the closing price 87 rupees, that is the body of the candle, and from the 100 rupees whatever it went up, that is the upper wick, and lowest from the body to the lowest of the day price, that is the lower wick. Okay, but overall the price decrease for that particular day, that is the reason there is a red candle. So in any chart or any stock, this combination will be red and green. Okay, so for today we will stop here till candle formation. We'll continue maybe some other day. I mean, if anybody have any quick question or wanted to clarify whatever we have discussed so far, please feel free to ask.
Sachinji, I think it was an amazing session with the basics covered very well. All of the terms have been explained very well.
Thank you, Prasad sir.
Yeah, it may help some of us if this PowerPoint is shared someplace. We can just go through that at some point of time. Or
Yes.
the recording is available also. It's good enough.
Yes, I will. Yeah, I will try to share these materials, whatever this recording we have.
You have covered the basics very well. Thank you. There was one question by somebody asking about what is a repo rate.
Yeah, good evening. This is Hina.
Yes, Hina.
Yeah, I just wanted to know one term. What is repo rate? Yeah, I put it in on the chat box. Thank you, Mr. Prasad, for highlighting.
Yeah.
I didn't understand that.
I
read it in one of the slides.
Repo rate, I think maybe it might be there, but we have not discussed today about the repo rate. Typically, it is related to the banks, not related to the stock market.
Okay.
Yes.
It was there in one of the slides you showed, so that's why.
Oh, okay. Yeah. So I mean, okay. Maybe one quick clarification about this one is maybe it is not directly reported to the stock market or whatever we are going to learn in trading and investing. It may be indirectly related. Maybe we can clarify in the upcoming sessions if you are okay with that.
Yeah. Thank you so much. Thank you.
You're welcome. Okay, so I think we have taken extra 10 minutes for today. Thank you so much for having with us today. I will share the futures session details, and we can continue our learning from there.
Thank you, Sachinji. Good night.
Thanks, everyone. Bye-bye.
Thank you. Bye. Good night.
Thank you so much. Good night.
You're welcome.